The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Another solid day for corn and soybean futures, both old and new crop. While meantime, live cattle futures soaring again, getting back above that $200 mark and really looking impressive here. Feeder cattle as well. Plenty of things for us to take a look at and try and dissect to the best of our ability. Let's do that today with Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, great to connect with you again here today and hope all is well in Wisconsin.
Well, thank you and much appreciated. And all is well. We seem to be getting over our very deep cold stretch for the season so far, but still on the chilly side. I think we're at about 14 degrees, and yesterday we were about 14 below. So yeah, so warm up.
Yeah, well, hey, and we were the same down here in Tennessee. I mean, we got to single digits overnight a couple times here. So the deep freeze has definitely not been fun for many folks here across the country. That's for sure. And I think for a lot of our producers, maybe dealing with the deep freeze, but at least having something to cheer about somewhat with the way the grain markets have rallied here this week. I know we set back a little bit Wednesday, but then Thursday, positive day for futures. And really, Brian, it feels like corn and beans are just testing some key resistance levels in both old and new crop right now.
They are, and you've got some points that the market might point to yet for higher prices. So I don't want to give anybody false optimism, but back on January 2nd of 2024, so over a year ago, corn prices gapped lower into the new year, and they left that gap on charts. So in the March contract, that's up around the 512 mark. So it's still going to take a hefty push to get there. A lot of farmers selling the last, in recent days, let's put it that way. But it's been an amazing turnaround in the managed money, the fund money. Just looking at a long-term chart there, about 350,000 contracts short in July to estimates it might be as long as 350,000. We'll get a clearer picture of that on Friday with the commitment of traders report, which will quantify it through Tuesday. So a lot of good stuff there, a lot of favorable reports this fall, dropping yield in corn. Remember, about, what was it, 3.8 last month, and I think in November was a bushel, so almost 5 bushels an acre, raising the demand, seeing some really good disappearance. So corn's had a really respectable and nice comeback, and the fund money's having a little more impact now because as farmers sell, there's just one less bushel in the marketplace to sell later. So farmers continue to sell into this, but the fund money is definitely on the long side of corn.
Well, and that farmer selling, I know basis has been steady to weaker for the most part, but yet still plenty of opportunity for producers to take advantage of here, essentially, Brian, and reward the rally. Something that, even 2 months ago, I think a lot of producers didn't think we would see this.
Right. And so it's hard to get your head wrapped around or your hands wrapped around the idea that maybe we're just in the beginning stages of a bull market. But we could be. As a farmer, though, this is what you waited for, wished for. You're getting it. You got to take some action of some capacity. One of the thing that is scary is just how aggressively long the funds are. What if they decide next week they're out, right? We know how fast things can drop, and I'm a student of history and student of the market, and we've seen, really since about 2012, 13, that window there, when the rallies come, sometimes they leave even quicker and they're really violent and they drop off quick. So the only way you can avoid that, I think, is keep selling the way up or do something strategically, buy some puts, do things like that that can shore up the downside. But good demand, declining carryout. And then there's a lot of conjecture. Well, why is it still rallying? What do the funds know? Do they know anything? I would say probably not. They may have really good, let's say, analysts who might look at satellite imagery out of Argentina and maybe put a little bit more emphasis on some issues there. But what they got right now is they've got what I call house money. If they bought in fairly early, they're making money. So it's not as much of a risk to add to positions as it would be when you start a position, because you can look to manage that. So I think you got some house money buying house money. But I want to take one step further. All of us in the egg industry, the last 2.5 years, have been clubbed over the head so hard with low prices that we think a rally of this magnitude might be the end, because we just can't get that imagination going that we could see 5.50 or $6 corn. But we've seen that plenty of times. So I'm not arguing we're going to see that, but the fund money might be thinking that, anything with a four in, it's still a cheap product to the end user.
It's a good
Especially if you
point.
look where cattle prices are, and the way milk, hogs, yeah, feeders go up with corn going up anyway. So
Hmm. It's sometimes, and I think that just reiterates that we can't outguess the market. It's all about risk management, and thinking about managing risk. Another potential factor here that we obviously cannot manage, but we have to pay attention to is South American weather, and that's going to be a very key pivotal point, I think, in these grain markets here as we get into the end of the month and into February, Brian.
yeah, so normally you ask me at the very end, what do I want farmers to kind of think about? What's important? I'm going to hit it right here, and I'm going to base it off of what you just said. It's hard to outguess a market because you're trying to outguess weather, and how does anybody do that with accuracy, and then yield and demand and tariffs and all of this? So now is a really, really good time to talk strategically with your team at the home, or an advisor or somebody, but really get more strategic and say, well, if it goes here, this is how I'm going to handle it if it goes here, so that you kind of got this spelled out. Let's face it, corn's at a point where it's got momentum. It could rally 25, 50 cents on a not so friendly forecast for the production in South America, or it could drop 50 cents really quick. And so we have to recognize that. I'm looking at the March corn here, and just to reemphasize, had a little bit of a pullback in mid-December of 437, and today, over 490. That's a heck of a rally that could disappear quickly. If we go back even a little smaller, late November, we're under 430 a bushel. So the markets have a tendency to take rallies back kind of quick. So just the idea is to be strategic. Corn, beans, wheat's still kind of a laggard, but corn and beans, it's time to really think about making sales, managing the risk, take advantage of the opportunities.
Well, and you mentioned wheat there, and I was going to say this wheat trade, a great rally Tuesday, but ever since Wednesday, Thursday, failing to kind of capitalize on any follow through. It's felt like even with a weaker dollar, et cetera, wheat just, I'll use your word, continues to be a laggard in these markets, Brian.
And I'm not sure why. We had bitter temperatures, not a lot of snow cover. You look at the drought monitor map where the winter wheat is. I wouldn't say that looks the best. So you've got some things that I want to think are useful and helpful, but at the same time, the market's not really responding to it and seems to be putting more of its energy in the near term in the corn and now the beans. Maybe a little bit more impact from southern hemisphere weather. But interesting, because you do have kind of a big story out there, as in Russia's crop seems to be less than ideal. And by some accounts, maybe 30, 40% rated as poor. The world's got to take notice of that, I think, at some point at these prices.
That's a great point. Let's flip over to livestock. I got to ask you about this cattle trade. Impressive couple of days here in live cattle futures. We have bumped up against that $200 mark for quite some time, and finally breaking through it and then closing back above it again on Thursday. I mean, fat cattle futures, I know cash has been over this mark for a while now, but finally getting futures through this level. I wonder if it opens us up to another leg higher potentially here to the upside, Brian.
I don't know that I don't see that. What I'm trying to say, I don't want to argue against it, right? Because you've got a higher cash. You got the momentum building up, right? And then I kind of stepped back, and I was actually doing a little bit of analysis and I might have mentioned to you before, but just kind of keeping this simple. But we're at our lowest beef herd since 1974. U.S. population 213 million. Now, I'm not taking into account the world. Since then, we've gained 122 million, 335 million. That's a 57% increase in the population, but no change in the beef herd, right? So per capita consumption to keep beef consumption the same has to go down by just close to equal amounts. So I've been arguing that I'm really cautious because I can't really get my thoughts wrapped around that you're building demand here. But maybe you don't have to build demand with tight supply. You just got to keep demand. The people who are buying beef keep buying, and those aren't buying as much. Well, they're being replaced by those who, it doesn't really matter what the price is. I'm trying to rationalize. But chew on this. I went through this with the producer here this afternoon here, and we talked about buying what the cost of feeders is right now. And with using the numbers that we did, gosh, the break even on those are about 215 out to August. August cattle right now are at 193, 192.90. So that's kind of scary, right? From a producer's perspective. But on the other hand, from an investor perspective, because the herd's so tight, they may just continue to buy the back months because if producers are losing money, they're probably going to even produce less cattle. And it's kind of this mean spiral, if that makes any sense, or could be. And maybe that's it's got the momentum, it's got the trend. The market just keeps buying until somebody stops buying, and that's almost the way it looks right now.
Well, Brian, I think about this too. We're kind of going on, I think it's year 5 of a bull market here in cattle for a lot of the reasons you laid out. And I worry that kind of the same thing, thinking about managing your risk in grains. I worry that some folks are getting so used to a bull market that they're maybe not managing their risk effectively in cattle right now.
Well, to manage the risk, a pure dollar cost out, it's not cheap, right? Because you're at such a high level, so you're going to pay more for insurance, you're going to pay more for puts. Margin requirement of cattle futures contracts a little bit higher, but that's what happens at higher levels. And to your point, another sort of thing to be cognizant of, if you're getting comfortable and you have that mindset that, well, this is just an uptrend, and that Brian guy said supplies are tight, and they may be sort of the circular pattern where unless they go up, to make farmers money, the herd's going to be less next year. Those are all kind of big picture if scenarios. The reality is you've got some really, really good numbers to work with right now. And like any other market, if cattle decide one day they're just done and they flip, you've got some big space underneath these prices. And it's really important to manage that space. Um, and that could happen, this anytime moving forward. But what's not in the favor of cattle producer right now is the higher corn prices all of a sudden.
Mm-hmm.
Even though it's good value compared to the price of cattle, but it's not as cheap as it was. So you could actually have higher feed inputs, and then all of a sudden the cattle market tip over. So and then your margins get pinched pretty fast. So just keep an eye on that. Would be my suggestion, and then talk to people that can help you execute strategy on that spread.
Looking over at the dairy sector and the hog trade as well, not as robust of a bull market, I'd say, as compared to fat cattle and feeders, but still, I wonder, is cattle maybe spilling over in any way, helping those markets try to move higher, or are we just kind of chopping around? What's your thoughts on the other sectors here in the proteins,
So
Brian?
it's an awesome question because you would think yes, right? Because where's the money right now? It's in calves. Calves are worth a lot of money. So if a dairy producer can put a calf on the ground, a beef calf, that's one less potential dairy heifer, dairy cow. So at what point do we all of a sudden figure out, geez, we're short 50,000 cows or 100,000 cows in this pipe, and all of a sudden this continuous growth and efficiency, we flatten out, right? Um, but the or the milk futures charts look horrible the last week and a half. They really plunged and they picked up a little ground today. Um, but it's the same thing I'm hearing on that end that I've been worried about in the beef market is demand is slowing. Product values are higher. People have bills to pay. The cheese supply is, in theory, starting to grow, and cheese prices went on the defensive, kind of hard. And then talk of tariffs is another thing in there, and a 10% tariff against Mexico and Canada. If those play out, February 1st is the last day I heard. So you've got all of those things, Jesse, that have kind of plagued the dairy market. On a big picture perspective, I think the market's in good shape and will rally back. But I'm disappointed that the deferred months aren't showing a little bit more something.
Mhm.
Um, I think we're going to run into some tighter supply down the road, um, based on numbers, based on just you can get too much for a calf right now.
Great stuff as always, Brian. I know you kind of alluded to some of your final thoughts earlier, but I'll throw it to you. Anything else we haven't touched on today that you want to mention or reiterate to folks?
Well, let's touch on this. That typically this time of year things can be kind of slow, right? And we've had a lot of volatility, so pay attention, right? I know a lot of farmers are getting ready for spring already. They're looking ahead. They're going to meetings or they're on some vacation. So don't give up on any of that. But take a little bit of time and make sure and study these markets. And it doesn't have to be long. Have a 5-minute conversation with your advisor. Call and say, "What do I need to know? I Tell me what's important." Because you can't do everything, right? So
Hmm.
get that input. So that would be my helpful hint this week. Is there's some opportunities here? Make sure that you look at these and decide how you want to move forward.
Well, and maybe if folks want to make you their advisor or have a conversation at least and see and share some thoughts with you, I know multiple ways to reach out. How can folks get in touch with you, Brian?
I would first suggest a phone call, like to listen, and that number is 800-334-9779. So I've got that, Jesse. Then I'd like to suggest, if you want to just shoot me an email, fine. It's Brian, my first name, Bryan. So it's Brian with a Y at totalfarmmarketing.com or totalfarmmarketing.com. Look us up on the website and take a look. Good resources there. But again, I just love to have that quick conversation with you or whatever it takes, but listen really well and maybe have some suggestions.
Always a pleasure. Brian Doherty with Total Farm Marketing. Thanks for joining us on the show today and have a great weekend. We'll talk to you next week.
Jesse, thank you very much. Appreciate the opportunity. And again, Happy New Year. Wishful for a good 2025.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.